Hello, welcome to European Open Briefing for Tuesday, November the 20th. I'm Rafael Jan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. There's a bit of risk-off sentiment this morning. We can see all Asian indices closed in the red, and we also have a negative start in Europe. On Wall Street yesterday, we saw another sell-off in technology stocks. This weighed on the US dollar, but also dragging on the greenback was weak housing figures out of the US. The dollar index fell sharply yesterday. This morning, it's a little bit steadier as we're seeing other major pairs decline against the US dollar, apart from the Japanese yen, which is, along with gold, is benefiting from the risk of sentiment. Dollar yen down by 0.2% at 112.30. Sterling and the euro both lower against the greenback at the moment. They were higher earlier in Asian trading. The Australian dollar is also down, but it was actually down by a bigger amount earlier in the day. We did see the RBA meeting minutes. They didn't have much impact on the markets as there were no surprises. Overall, the Aussie is down on that risk of sentiment. The exception is the New Zealand dollar. The Kiwi is up on reports of higher milk production. Of course, dairy is New Zealand's biggest export. We also have the dairy bi-weekly auction coming up later in the day. If you have a look at commodities, we can see oil prices still down. The rebound we saw early in the week didn't really last that long. The weakening outlook for oil demand is dragging on oil prices, even as OPEC is considering cutting output. Gold, along with yen, is up at around 1.5-week highs. And if we have a look at the main performers, we can see the Kiwi being outperforming pretty much everything else at the moment. Taking a closer look at the dollar-yen pair, we can see there's a bit of a downtrend happening in the second half of November. The dollar came under pressure last week on doubtfully perceived remarks by Fed officials on Friday. We had the New York Fed President John Williams speaking yesterday. He wasn't quite as dovish, but he did sort of suggest that raising interest rates would be dependent on a strong economy. So if we do see signs of a slowing US economy, we could see the Fed potentially slowing down its pace of rate increases. Yesterday we had housing numbers, a housing sentiment index by NHP Wells Fargo, which dropped to 2-year low. We've got more housing data coming up today and later this week as well. So the housing impact appears to be being negatively affected by higher interest rates, and that could potentially spread to other sectors of the US economy. We're seeing 10-year yields, treasury yields drop to 1.5 months low, the dollar yen slipping to 3-week lows. Taking now a look at the European currencies, both the euro and the pound recovering from their early lows in November. The euro, of course, much more significantly as the pound is being hit by the Brexit uncertainty. The euro has climbed to a near 2-week low of 1.1472, and this comes even as the European Commission is considering starting disciplinary actions against Italy, as the Italian government refuses to make required revisions to its budget, to its spending targets. The European Commission will announce its decision tomorrow. They're not likely to approve Italy's budget, and we could see the start of disciplinary action, and that could potentially drive the spread between Italian and German government bond yields higher, and that could then start to negatively impact the euro. And having a look at sterling, it's holding close to around the 1.2875 area. There's the Tory rebel MPs have yet to secure enough votes to trigger a leadership challenge to Theresa May, so she might be able to just get away with it once again. And in the meantime, she's continuing to promote her Brexit deal she struck with the EU last week, but she's considering coming up with alternatives to the Irish backstop in order to win support from Brexiteers and others in Parliament, which at the moment she is unlikely to win the support of lawmakers in the UK for her plans. And finally, having a quick look at gold, we can see there's been a bit of a rebound in the precious metal. It's now from those November lows, it's recovered to one half week high, $1,225 an ounce. So the weaker dollar, of course, does help, but we've got a number of uncertainties. We've got Brexit, we've got the Italian budget standoff, we've got the stock market sell-off. We saw another sell-off in tech shares overnight, and slowing Chinese economy, and of course those ongoing trade tensions. There's some mixed signals coming from the US and China. So there was some optimism now following that APEC meeting over the weekend. There's a bit more doubt as to whether or not the US and China will be able to make any progress when the two presidents meet at the G20 summit at the end of this month. And looking at what's coming up, the focus in the US session will be on building permits and housing starts, and we're also going to have Bank of England inflation hearing in Parliament at 10 GMT. That's it from me. Thank you very much for watching and have a great day.